Hello and welcome to Lapping Analytics. My name is Jimmy Lapping. I'm a psychologist and statistician with an interest in a range of topics, including the financial markets. And in this video, I'm going to look at the one-year trajectory of WTI crude oil, gold, silver, copper, and natural gas, as all measured in US dollars. I have a look at that through the lens of weekly performance. So the candles that you see, for instance, in this chart here are the trading weeks, 53 trading weeks, including the trading week that ended on Friday, the 27th of March. As I'm recording this video, it's the 30th of March. Markets opened in Europe, and the stock market in the US is set to open in 5 hours from now. So here we see a chart of the WTI trajectory, the one-year trajectory since the second half of March last year, all the way until the week here on the right, the 27th, that ended on the 27th of March. We see that we've had quite a bit of a move, actually, and for a long while it looked like the moves that we had. What is this in June or something, late June, or something June, maybe early July, were quite strong. First up towards the high 70s, low 80s, and then again strong downward movement. That was considered quite a strong movement, but when we look at what happened since the start of the war in Iran, which is the second vertical line here, this is this marks the start of the war in Iran. We've had four full trading weeks with that conflict in Iran taking place, and we see what happened to the oil price. It went all the way from the high 60s where it was trading. It had been moving up, creeping up a bit from the high 50s all the way through the high 60s, but then a jump all the way until in the second week almost 120 US dollars per barrel, and then it has been coming down for a little bit. But as we speak this morning, it's again in the 100 somewhere. I just double check, and it's about 102, so it's about like here as we speak. Where can this go? Well, first of all, this is the range that we've seen since the start of the conflict in Iran. It's quite a range, and where does it go? Well, on the one hand, you could say we reached a peak 2 weeks ago, and it has been coming down. On the other hand, we also see a clear trajectory of higher lows. If we had both higher highs and higher lows, then it would be a clear path. That would indicate a clear trend up. If it was lower highs and lower lows, it would be somewhat of a downtrend. But now it's still that these two lines here are converging. And okay, you can use time series analysis to provide a statistical forecast of the oil price, but I wouldn't want to do that right now. Because really, on the one hand, if this conflict escalates, it could well be that we soon see a retest of this area around 120. On the other hand, if there is somewhat of a calming of the situation, then we could also see that the oil price retracts and first gets to this green area. The upper bound of this green area is in the high 70s somewhere. So around, let's say, around the $80 mark. If it goes in that direction, then this green area would be in the high 60s to high 70s. Would at least be a more favorable trading range than we are seeing at the moment. But yeah, it really depends on how the situation in Iran is going to unfold. And we have seen in the last few weeks that even sometimes a single tweet can push the oil price up or down. So we will see. Have a look at gold. One of the reasons why I look at the metals in this video is that there has been quite a bit of talk that, yeah, well, gold and also silver, we will see in a minute, came down because of the war in Iran. Well, what is that the case? Well, when we have a look at this 1 year chart of gold, remember that the second vertical line here, so here on the right, that is where the conflict in Iran started. Um, Yet we see that the gold price actually peaked already 4 weeks earlier, which is not a surprise. I mean, gold had been moving up very strongly. Now, in this 1 year chart, you don't appreciate it that much, but I think a couple of months ago, I shared a video where I had the move of gold from like with the bars being months, and then I took a multi-year trajectory all the way until the early 2000s, and you can really see that gold, especially in the last years, has been moving in an almost parabolic fashion. So at some point, well, there is a correction. That correction actually happened, that first correction already happened about 4 weeks before the conflict in Iran started. It is true that we had somewhat of a recovery. It was going back to those highs from several weeks ago. Uh, and it is true that since the conflict in Iran, we have seen moves down. So, but is it to say that, well, it started to correct because of the war? I don't know. I mean, I would be careful with that. First of all, with time series and single events, it's always dangerous to say, well, just because of that event, something went up or came down. But in this case, the chart clearly shows that there was already a higher peak for about 4 weeks before the conflict in Iran. And well, so basically those 2 points here, for instance, this is lower highs, and here we also have lower lows. So now it looks like, at least on the short term, it looks like somewhat of a downturn. Well, this green area is an area of support where we have seen like levels previously. So this is where the gold price is moving right now. And I would expect this area to provide some support. I mean, of course, it's possible that it goes lower. So it's not that if you just magically draw a line or a square or a rectangle, that's where the price will stay. Of course not. But well, just if history is a guide, it could well be that the gold price finds support in this area. Silver, we see a trajectory that's somewhat similar to that of gold, yet a little bit stronger. I mean, in gold, we saw a stronger recovery after that peak, that initial peak 4 weeks before the start of the war. In silver, we see that actually this is a very strong peak in a spike here 4 weeks before the war. And in the case of silver, I wouldn't even say it recovered meaningfully since that spike up, because even in the week before the conflict started, this bar is lower than the one we had in the week before that spike up. So I would say that silver was already in a very clear correction mode before, like several weeks before the war in Iran started. It is true that we saw somewhat of a move up in the week before, and since we have seen a move down, but clearly the peak was reached several weeks before. So the narrative that gold and silver started to correct because of the war in Iran, I have difficulties with that narrative based on simple empirical movements. Okay, now here we see an area that I would mark as a support area. This was like a little bit of a high before, and then it became the new low in the week after. This is an area which moves from, let's say, the mid 40s until the high 50s or maybe around 60. So this means that, I mean, it's possible, of course, silver bounces up from here. And in fact, this morning we're seeing silver slightly in the green. But I wouldn't be surprised if the silver price, keep in mind these bars are weeks and the trading week has just started. I wouldn't be surprised if we see further move down, and silver will eventually be back to the, what is it, mid 50s or something, lower to mid 50s, which is, by the way, an area that's also on X. Also, some scholars have called that silver could go there, and based on this chart, I would agree with that view. Doesn't mean it has to go there, but I wouldn't be surprised if we saw those levels. Copper. Again, we saw here also, like we saw strong movements already earlier in the year, and well, in this case, the move down um, after the conflict, after the start of the conflict in Iran, has not been as strong as, for instance, we saw here much earlier in this 1 year trajectory. But again, as for gold and for silver, we see that the peak was like a clear spike was reached here 4 weeks before the conflict started, not around the start of the conflict. And well, we see that after the spike here, 4 weeks before the war started, we see that this actually copper was trading horizontally. There wasn't even any kind of recovery towards that high that we saw in the week before. This is really sideways trading. And well, initially the first week, maybe the first two, you could say it was still in that sideways range. But then, all in all, these 4 weeks show a downward pattern. And again, also as for gold and silver, lower highs and lower lows. So this looks now more like a downtrend, at least on the short term, based on the last, what is it, 8 weeks or so. 8, 9 weeks, yeah. And then the green area is again an area of support given previous highs and lows. So it seems that we are in this territory. So for, I would say, gold and copper, I think further down, I mean, of course, further downside is always possible depending on how geopolitical events develop, and other news in the financial markets. But I would be more surprised if copper and gold had major moves down here than, for instance, silver, because silver, we saw that the green support bar is still a bit lower. For gold and copper, the picture looks a little bit more positive than for silver, I would say. Natural gas, because well, so there was also some question. Okay, if the oil price is going up, then surely gas must also go up. Well, no, because oil and gas move in quite different directions, because they are at least in part driven by different kinds of fundamentals. But again, as for the three metals that I showed so far, we see that also for natural gas we had a very clear spike about 4 weeks before the war started, and then it came crashing down. I don't use the term crashing down lightly, but when you go from a peak of almost 8 to then here levels which are well below 4, that's more than a 50% a correction, I would dare to call. I mean, that's at least that's a kind of a magnitude with which I'm more comfortable to speak of a crash. I mean, if it's at 10%, it's just a correction. 20%, okay, still somewhat of a stronger correction. I wouldn't speak of a crash. I mean, sometimes when you follow the news, mainstream media, they talk about, oh, yeah, the markets crashed today, and it's just a move of 1%, 2%, a few percents. Oh, the oil price crashed 5%. No, that's not a crash. It's a correction, or not even 10%. Some would say starting 10% is a correction, but okay, this move is very strong. Natural gas spiked up to almost $8 and then came down to well below 4. And well, now we are in the lower threes, below 350. And let me just quickly check this morning. Natural gas, yeah, in 293 even. So it's again it's around this horizontal line here in the lower area. We are in support territory here. This is where we have seen natural gas prices before as well. So I wouldn't expect much movement down. Again, it's always possible. The fact that you draw lines and rectangles doesn't mean that the price stays there. But I would be, I mean, let's say again, I would be more surprised if we saw further downside in the gas price than, for instance, in the silver price, given the charts that we have seen. Here a look at some general trends and volatilities. The median is the median percentage change from week to week. The IQR is the intra-quartile range, which is basically the difference between the 25th and the 75th percentile. Some people may wonder why I use medians and IQRs and percentiles as measures of central tendency and dispersion instead of the mean and the standard deviation. That has to do with the fact that we have seen some very strong movements in some of the in some of the subjects studied, at least in silver, also in oil, also in natural gas. And then the standard deviation, for instance, is then heavily blown up by such extreme cases. And the same holds for the mean. It's strongly pulled towards those more extreme cases. The median and the interquartile range do not suffer to the extent that the mean and the standard deviation do, but they do give somewhat of an idea of more or less volatility in different subjects. So in this case, the clearly most volatile subject is natural gas, which has an intraquartile range, which is, well, what is it, 2.5 times, almost actually 3 times in comparison to copper, for instance. The dispersion, yeah, so natural gas is clearly super volatile, has had very good weeks and very poor weeks, and all in all, so the median is lower, so that means that there were more weeks with negative change than there were weeks with a positive change. Here we see a network. It's kind of a correlation network, but with an estimator that shrinks very small correlations to zero and gives more weight to the stronger correlations. Here, this network shows how different, how the week-to-week changes in the 5 subjects are related, with thicker lines indicating stronger relations than thinner lines, the blue lines indicating positive correlation, meaning that positive performance in gold also tends to go together with positive performance in silver, or better performance in gold tends to also go hand in hand with better performance in silver. Worse performance in gold tends to go together with worse performance in silver, etc. Red lines indicate negative correlations, which means that better weeks in one subject tend to go together with relatively worse weeks in the other. But this is very weak, this correlation, and it also depends on how you deal with the outliers in the distribution for oil, because there have been some very strong movements. In any case, the most substantial relation is between gold and silver. I've shown this in previous videos as well, and I will say a bit more about that in a minute. This is the most substantial correlation. Historically, gold and silver have had correlations of around 0.8. In a previous video, I already showed, or I think even in 2 previous videos, I showed that this correlation has been coming down a little bit, but still it's in the 0.70s somewhere. Silver and copper also a clear positive relation. Both are important in several industries, industrial demand of both metals. So that explains this positive correlation. And you see natural gas and WTI. The fact that this line is missing, or it's so weak that you cannot see it, shows that natural gas and WTI have very different trajectories. You cannot predict movements in WTI crude oil by natural gas, or vice versa. At least not in the same week, and that's what I show here. Here I show a so-called cross correlation function. I've shown this in previous videos. What this shows is lag 0. That's this one here, which shows a correlation of 0.73, which is a strong positive correlation between gold change and silver change, which means the percentage change from week to week in gold in a given week, and how that correlates with the percentage change in silver in that week. That's lag zero. Lag zero meaning there is no time difference. It's the same week. We also see that outside lag zero, the correlations are considerably smaller. None are statistically significant, otherwise they would exceed either above or below these blue dashed lines. If there were strong correlations on the right, that would mean that changes in silver in one given week could predict changes in gold several weeks later. And if there were strong correlations here, that would mean that changes in gold in a given week could predict changes in silver several weeks later. So for instance, at -5 would be the extent to which you can predict silver changes in week 5 from now, in 5 weeks from now, given gold changes this week, for instance. So here would mean gold is would predict later silver movements, and here it would mean that silver would predict later gold movements. We don't see any of those. We only see a strong correlation at lag zero, which means that there is a tendency to co-vary together at the same point in time, at least when we take weeks as a unit of measurement. But even if you took days or months, you would see very similar patterns. In fact, previously in a previous video, I used months as a unit, and the correlation between gold and silver at lag zero was also very close to this value. Okay, for gold and WTI, for instance, it looks different. Here we do see a negative correlation at lag 2, which means that it's on the right of 0. That means that in this case, so the unit is weeks. The lag 2, that means that changes in a given week in oil to some extent predict changes in gold 2 weeks later. But of course, one has to say this correlation is much weaker than the correlation we saw for gold and silver. If you square these correlations, then you have an approximation of the percentage of variance you can explain in one subject by the other. So if you square this number, it would be a bit more than 0.5, which means that you would explain a bit more than 50% of the variance. So with gold changes, you can explain about 50% of the variance in silver change, and vice versa in a given week. Well, so if you squared this number, that would be just below 0.20. No, so this would explain less than 20% of the variance. Still, this would explain some, but it's not as strong, of course, as between gold and silver. So to some extent, it seems that oil changes in 1 week can predict gold changes 2 weeks later. And for natural gas, we see, so WTI and natural gas, we see a positive correlation between WTI and natural gas, but not at lag 0. We also already saw that in the network that we visualized before. There was no visible line between WTI and natural gas, and at lag 0, the correlation is very close to 0. But when we look at lag 6, we see that there is a positive correlation of about 0.52. If we squared that number, we would get something just above 25%. Which means that in this case, changes in natural gas in a given week predict to some extent changes in oil 6 weeks later. So changes in natural gas are somewhat predictive of later changes in WTI. Just as a recap for the 5 different subjects that we've seen, what's the trend currently? Well, for the 3 metals, we've already said it looks pretty similar, although for silver a bit bleaker than for gold and copper. Gold and copper have reached a support zone, silver not yet. The support zone I haven't drawn here, this green zone, because it would be a bit messy zooming out. But in any case, for all 3 metals, the short-term trend based on the last 8 to 9 weeks, so let's say 2 months, the short-term trend is down because we've seen lower highs and lower lows. Here also lower highs, lower lows, lower highs, lower lows. This was the peak, this circle that you see up here, the peak that we had now about 8 9 weeks ago. And this is the close. This is the low of last week, not the close. This is the low of last week, so of the trading week that ended on Friday 27th of March. Lower highs, lower lows, so at least on the short term, a downward trajectory. Again, if you zoom out, you take a multi-year window or you take months as units, okay, then the picture looks slightly different, but short-term view is at least down. When we look at oil, it's not that clear cut because we see lower highs but also higher lows. So these two lines are converging, and there it really depends on what the continuation is like for the conflict in Iran. I mean, obviously, the oil prices. This should be one of the last reasons why we hope for a sudden conclusion and positive conclusion for the conflict in Iran, because many innocent lives have been lost, and the oil price is just a side effect. I mean, obviously, this has global consequences, and in the financial markets, or when you get gasoline, and it's like, oh, yeah, the oil price is going up, but obviously that's not the first reason why the conflict should end. But if it ends, then most probably we would see um, a retracement in the oil price as well. Though if it escalates, then we could see a renewed test of the area that we saw at the start of or just after the start of the conflict. Let's hope we don't get there for a multitude of reasons. And natural gas, well, we had a very strong move down after that, also strong spike up. And it looks like we are in a territory where I would be surprised if we go much lower here. I mean, possible it is, and time will tell how things go. But it would surprise me if we saw substantial downward movement from here. Having said, I hope you found this helpful. So you see, it's not as clear cut as to say gold, silver, and copper have gone down just because of the war in Iran. Like a clear peak was already reached 4 weeks before the conflict even started. But yeah, in any case, these are the trends that we have in front. I hope you find this helpful. If you have any questions or suggestions, just leave some comments below this video. And thank you for watching, thank you for listening, and I hope to see you in a next video. Have a good day. Bye bye.